And also the instructor, Delante, definitely make sure that any questions that you have does not go unanswered. Very genuine, very transparent, and really loves what he does. And that's one thing that I look for in a mentor, is someone that's very passionate about what they do. So it's definitely something that I would recommend.
You teach how the markets move, like, you know what I'm saying? How what really make the markets move, like, you know what I'm saying?
Yeah.
So it's just, I don't know, before it was more like a network marketing thing. It ain't really like, you know what I'm saying, teaching how to trade. They'll teach you about trading, but they ain't teach you how to trade.
Hey, welcome to Markup Mondays, everybody. Welcome to Markup Mondays. What's going on, Joe? What's going on, Julian? Everybody else who's on the call, let me know that you're here. Go ahead and drop what city you are tuning in from. Where are you? And what time is it where you're at? All right, it is 6 o'clock. It is 6:05 in the morning here in Dar es Salaam, Tanzania. Where are you viewing this live stream from? And what time is it where you're at? My name is Delante Brady, Chief Analyst and creator of the Snip3rs Anonymous course. And this is Markup Mondays. We do this every Monday at 11 p.m. Eastern Standard Time. I still go by the time of back where I come from, which is Cleveland, Ohio. All right, we have Denver, who's in Akron. We have Julian, who is in Cleveland, and it is 11 o'clock there. All right, cool. Welcome, Denver. Welcome, Julian. Welcome, Joe, and everybody else who's on the call. If you are viewing this later, go ahead and still drop in the comments. I still respond to the comments even later as they're coming in. So if you're viewing a pre-recorded version of this, go ahead and drop in the comments where you're calling in from, and what time it is. But this is Markup Mondays, where we analyze the foreign exchange market. Not only the foreign exchange market, sometimes we get into cryptocurrency and the stock market as well, and go over world news, and then we just prepare for the week, right? This call is really designed to just set the tone for the week. That's why I started it on Mondays, because snipers, we don't really start trading until Monday. The sniper schedule, as everybody knows, really goes from Tuesday, really early Tuesday morning, until about Thursday, sometimes Friday early morning. But we analyze the markets, we prepare for the week, we go over world news, we go over news pertaining to the pairs that we trade. And then if you guys have any pairs that you want me to look over, any stocks that you want me to analyze, just drop that in the comments. And if we have time, we will get to that. But first things first, we will review last week, and then we'll go over news. Last week really wasn't anything going on as far as what we called out on Markup Mondays, because the market really just fell. Like, it's taking a dump right now, and the United States dollar is very, very bullish. So as I'm talking, I'm gonna go ahead and share the screen. But yeah, the technicals are pretty much out the window right now, and it's kind of best to just trade in the direction that the market is going, because there's so much momentum. And let me check to make sure. Okay, let me put myself. Hold on, guys. Let me get this together. All right, here we go. All right, go ahead and drop a 1 in the chat if you can see my screen. If you can see your USD up on the screen right now, go ahead and drop a 1 inside the chat. Let me make sure my screen share is working. All right, we are good to go. So last week we were looking for sales, of course, but our sales zones were pretty high. Like I said, the market pretty much just took off without really pulling back to any of our sell zones. And so we were looking for the market to return back to certain areas, but as you can see, it just fell. It just fell. So we ended up catching some sales on the way down. But as far as Markup Mondays, those sell zones did not get returned. So what we're going to do, let's go ahead and look at, of course, we always want to check the weather for the upcoming week. And what I mean by checking the weather is we always want to check news. All right, we want to check news that is pertaining specifically to the foreign exchange market. And I like to use my FX book. It is free, and it's also free to set up a profile on my FX book. And when you set up a profile, you can actually customize what you see. So I got rid of a lot of the noise. I customized. I only see high impact folders. I even got rid of the orange folder. So we're only seeing high impact folders. And then I only have the Euro, GBP, and the United States dollar. Okay, so for Monday, we already had news on retail sales for the Euro. So what's coming up for Tuesday? The only thing that's coming up for Tuesday is the economic sentiment index, and that's going to be for the Euro at 5 a.m. I'm not really expecting a lot of movement from that, but if you are trading the Euro, be on the lookout around 5 o'clock for volatility. On Wednesday, we got a lot of action going on. So on Wednesday, GBP, we got the goods trades balance, GDP, and those are all high impact news. And that's going to be at 2 o'clock in the morning. So that data is going to be released at 2 o'clock in the morning, Eastern Standard Time. And then for the Euro, we have unemployment. Of course, unemployment tends to cause volatility in the market. That's going to be at 5 o'clock in the morning. And then we have the inflation rate, core inflation rate for the United States dollar. And of course, that is going to move the markets. That's going to be at 8:30 a.m. So we have a busy day on Wednesday for the euro, the dollar, and the pound. On Thursday, we have a PPI, initial jobless claims. Of course, that's going to move the markets, and all of that is going to be at 8:30 in the morning. So we have a big day for the United States dollar on Thursday. All right, so on Thursday we have a lot going on for the U.S. dollar, and of course there are a lot of pairs that a lot of people trade that is connected to the United States dollar. So this is important information to know. If you're not looking at anything, you definitely should be paying attention to the United States dollar and what it's doing if you're trading anything that's connected to the United States dollar. And then on Friday, we don't trade on Fridays, really past the London session. And that at 8:30 in the morning, we have retail sales. We have 4 red folders basically on Friday at 8:30 in the morning for the United States dollar. Okay. So let's go ahead and get into analyzing these pairs. First things first, I want to look at the dollar. Let's go ahead and take a look at the dollar because that's going to give us a gauge on what's going on with all of the other pairs. If anything is paired up against the dollar, for example, the euro versus the United States dollar, GBP or the pound versus the United States dollar, the Canadian dollar versus the US dollar, right? Or if it's paired against the dollar and the euro is first, the direction of the dollar is going to basically the first pair determines, or the first quote in the pair determines the direction of the trend. So for the euro, if the dollar is strong, then that means that the euro would be weak, right? If the United States dollar is going up, that means that the euro should be going down. So let's check out the dollar. And we are on the 4-hour time frame right now. Let's scale out to a higher time frame. Let's go to the weekly. Let's see what's going on with the weekly. Let's look at this. So each candle represents 1 week. Make sure everything is good. Okay. Each candle represents 1 week. And so the dollar has been bullish for the past 3 weeks. Really, I mean, it's been bullish since May 31st of 2021. But as far as volatility entering the market, a lot of volatility has came into the market since April of 2022. All right. And what I mean by that is look at the size of the candles in comparison to other candles, other weekly candles. All right. Look at these weekly candles. These are average movements. We have a large movement here, but we pretty much have like small candles on the weekly. But as we, get into these inflation rates being released, look at the volatility that has come into the market. All right. And with volatility comes momentum. And the momentum right now for the dollar is very bullish. And I don't want to go against that. So anything that we're analyzing, if it's against the dollar, more than likely we're going to be looking for sales. Definitely going to be looking for sales. So that's simple. As far as where I see the dollar like rejecting from or stopping, we can look left and see if we see anything. Let's go to the monthly. Let's wait for the rest of this chart to load. All right, so the rest of the chart isn't loading right now. We'll come back to that. All right, but let's go ahead and get into the euro versus the United States dollar. And let's see if we can find an area that looks good to sell from. All right, so like I said, technicals have pretty much like went out the window with the momentum. And so the euro is just selling. And so with that, I would like to see some sort of a pullback, but I don't expect a big pullback. And so I'm looking at where highs and lows were created. And the last major low that was created was here. And let's make that a white line. All right, so we have a major low that was created here. We do have a significant high here. We have a significant high and a significant area, possibly for a sell. But with the momentum, I'm going to look for a sell where this white line is at. All right, at the last low, if a sell hasn't already happened. Okay, so we have a high here. We do have a high here. And if we come back above this high, we have a logical sell area. We have a previous low, and we have a candle here. A sell area. And so boom, this is going to be my first sell zone. All right, so we have a sell zone. We have an earlier sell zone that we could take. I would like to see it come a little higher. Although it is a lot of momentum, we have sold off a lot. And eventually we should see a bounce. Even if it's going to continue down, we eventually should see a nice bounce. Of course, we don't know when that bounce is going to happen. First sell zone. It's a possible sell. All right, so we have a possible sell reaction zone, but I would prefer to wait for the first sell zone, which is right above this high here. And then let's go ahead and look for a second sell zone that makes sense. Boom. And we already identified it. All right, so we have our possible sell zone. I would only focus on the reaction here. Our first sell zone, I will be targeting below the last low that was created, which at the moment is right here. All right, so we're talking about, if we sell from this area, we're talking about 60 pip. That's a 60 pip move right there, with a 20 pip stop loss. Say that's a 1-to-3. It's a 1-to-3 ratio trade. All right, so that's it. I'm going to leave this up for a quick second. We're on the 1 hour time frame right now. We have our second sell zone up here in between price levels of 1.01635 and 1.01878. Our first sell zone right here is in between the price levels of 1.0630, 1.00630, and 1.00719. Let's just say 720. And then the reaction, if you feeling like getting in early or you feel like you're going to miss it, is at price level 1.00350. And let's call it 1.00450. So a range of 10 pips. And it looks like EU is it's just about to continue down. If it does come back up, that would be nice. But definitely looking for a pullback. I don't want to just get in where it's at right now, because it's just too risky to try to hop in for a sale. Despite the momentum, it's just too risky to hop in for a sale where it's at right now. It's too close to the last low. So, but that is what I have for EU. Let's go ahead and look at what people want to analyze. Of course, we got US 30. Bitcoin, gold, and GJ. Hey, what's going on, JB? JB from Cleveland was on Facebook Live, but now on YouTube. Yeah, Facebook, sometimes they act funny. That's why I had to come to YouTube. Sometimes Facebook, they'll silence the live or they'll cut it off. So, yeah, YouTube is where it's at. Okay, GJ. All right, so the first one we'll go over, let's go ahead and go over US 30 since that's pertaining to the stock market. I'll also look at SPX. No, they're pretty much the same thing. All right, so let's look at US 30 on the daily, see what's going on. Of course, we're distributing and using basic market structure just for good measure. All right, so we got our high, low, lower high, lower low, lower high, lower low, lower high, lower low. And so this one is simple. I'm not expecting US 30 to come back above this high right here. Not expecting it to clear that high. A sensitive area, though, that we could be looking at is this low here. All right, see that? Last low, lower high. From there, we broke the low, created a lower high, broke back down below it, but now we're starting to creep back up to that area. And so that's probably going to be a sensitive area. So I want to leave that line there. Let's go ahead and delete these to clean up the chart. So we have our higher time frame directional bias. Of course, US 30 is so volatile, you could catch buys and sales on the lower time frame. But if you were trading from a day trade or a swing trade type of style, see, we have a market gap here. Definitely want to notate that. Everybody see that market gap that happened right there at, let's see, right there at the market open of the week. There was a gap. Market dropped down, came back up, filled the gap, went down, and now we're playing in that gap area again. It looks like it's rejecting off of the gap area. So we're currently rejecting off of that gap area, which is sensitive. So if US 30 comes back above these highs, the next area I would be expecting to sell is somewhere in this area where we see the yellow line. But it's currently selling. From the daily, it's been selling for the past 3 days. So this was a market open from back in June, market open gap from June. But it's a sensitive area and it looks to be falling from that area right now. So we created a 3-bar pattern or a swing high within bearish institutional order flow. So let's drop down to some lower time frames to see if we can find a sell in between this range here. All right, so we see some structure now that we've come down to the lower time frame. See that we have a high, we have a low, we have a lower high, and then we have a lower low. So of course, let's go ahead and highlight this area here, which is probably going to be sensitive for a sell. Drop down to the hour, see what we see. All right, so it looks like we're currently falling from this sell area here. All right, we had a previous low. We broke out of it, came back above it, but we came back down and broke below it. So did somewhat of like a break and retest type of situation, because this was a major previous low, and that sell happened right here. So as far as what price is doing right now, I believe this is the origin of the current move that's happening, which is responsible for all of this imbalance that's been created. And with it being so much momentum, of course, we can measure half of the imbalance, which happens to be within the same area of the sell zone. All right, so what I would be waiting for on US 30 is a pullback. I would like to see some of this imbalance get filled in, and then here's the next sell zone. All right, so this is going to be the first sell zone. I'm going to put reaction. Drop down to the 15-minute and see. Yep, I like that area for a sell. Let's go ahead and take this off here. So that's the first sell zone. Another major sell zone. Let's not forget where this previous high was at. Or I'm sorry, previous low. All right, remember that yellow line is a previous low over there to the left, a previous major low. We have a high right here to pay attention to, a major high. There'll probably be some reaction there as well. All right, so I'm gonna say this is the second sell zone. And the third sell zone. And where price level is at on these sell zones for US 30, that is at 32200, in between 32200 and 32, let's just say 300. 32200 and 32300, which is about 1,000 pips on US 30. Second sell zone is in between 31, let's say 640 and 31750. That's the second sell zone. And then on a smaller time frame, this first sell zone is going to be in between the price levels of 31180 and 31210. All right, let's go ahead and head over to SPX. Exactly why is the area sensitive? So Arthur asked a question. He said, exactly why is the area sensitive? Let me go back to US 30. Which area, if you could comment and let me know which area did I call sensitive? All right, and while I'm waiting on that comment to come in, I'll head back over to SPX 500. Let's go ahead and overview that. And SPX 500, of course, is the top 500 American companies. And so it represents the health of the overall stock market in the United States. And if you've analyzed US 30, you've pretty much analyzed SPX 500. There will be slight price differences, but directional bias is going to be the same. And as you can see, I already have this marked up with the highs, the lower highs, lower lows. And so we see the direction that the market is going as far as institutional order flow. I do have a major short-term buying opportunity down here that I'm waiting for SPX 500 to come down to. But our last low that we created was on June 17th. And we had a bounce, and we've pretty much stayed above that. But I don't believe SPX 500 is turning around right now. I believe it is bearish. All right. This is a failed rally. So we bounced from this point. We created a higher low, but we just created a lower high. See that? Because this high didn't clear this high right here. All right. So Arthur said the first sell zone on US 30. Okay. Let me go back to it. So before I do that, though, let me go ahead and finish SPX 500. So because this area, see how this says previous major low, I would be expecting a bounce. I'm expecting SPX 500 to come down here and possibly bounce. And then I think that's where we'll find the sell opportunity. Let's go ahead and mark this up right here. This looks like on the lower time frame, drop down to the hour. And so if we follow the institutional footprint, next sell zone would be here. Next reaction should come from this area right here. So we're gonna call this the first sell zone. So we'll look for a reaction. All right, second sell zone. Okay, and the third sell zone would definitely be this previous mitigation area. All right, so that's what I have for SPX 500. First sell zone is in between the price levels of 3850 and 3860. And then we have 38, let's say 70. Second sell zone is in between 3870 and 3890. Third sell zone, which is going to be a previous mitigation or a failed buy area, should be a sell area now. That's going to be between the price levels of 3950 and 3980. All right, so that's what I have for SPX 500. Go ahead and delete this. Now let's skip back to US 30 really quick and go over why I called the first sell zone sensitive. The reason why it should be a sensitive area is because there's a candle there, right? We see the IC there. We see the IC there. And if we follow the institutional footprint, we know that this is where the sell, as far as in between this range and this range here, the sell originated from here, right? If we're following the footprint. So in between this range, the sell originated from here. We see our IC at the first, sell zone reaction, our first BTC or buy to sell, and it's right under imbalance. A lot of times when you have an IC and right above or right below the IC is imbalance, that's a sensitive area for a reaction. More than likely is going to react from there. Stop loss above the high, sell zone here, target below the low, and then of course whatever your first target is. For example, on EU it would be 20 pips. You take your 20 pips off the table, and then you let your ego position run. The EGO position is where you see the market going. The 20 pips is what automatically, what should automatically happen. On US 30, that's probably about 200 pips, the reaction. The move itself is probably going to be close to 2,000 pips. Yep. But that's why, Arthur, because there's imbalance, and right above the imbalance, we have our BTC or our IC candle. And it's right at that sell zone. And that BTC or that IC candle originated from another sell zone. So if we were following the institutional footprint, which here we have a significant low, and from that significant low, we had this sell. This area is sensitive because of that. Hopefully that made sense and I answered your question. Okay, yeah, no problem, man. All right, next let's get into BTC. Let's go ahead and skip over to cryptocurrency really quick. Like I told everybody last year, what's happening right now is expected. I'm looking for BTC to drop down to 15,000, possibly even 12, but 15,000. See Bitcoin going down to 15,000, and I don't see it recovering like it did before, like as quickly as it did before. I see another situation that happened when we ran up to 20,000 back in 2017. Okay, when we ran up to 20,000 back in 2017, the price fell and did a correction, 80% correction, and we did not see 20,000 again. It dropped in 2017. We didn't see 20,000 again until 2020. All right, so that was a range of 3 years. That was a pretty nice gap before we reached back up to 20,000. And I believe we're about to see the same type of scenario with the run up that just happened. Okay, I believe that this is a bigger version of this. The market is fractal, tends to repeat itself. And with the way the world is looking, the way the economy is looking, this isn't going to just skyrocket back up. I believe it's going to take some time. And so that actually presents a good opportunity for, investors who don't have capital like, these big institutions do. You have 3 years time to get your capital together to invest in cryptocurrency while it's low. All right, if it stays and it ranges between the price of 12,000 and let's say 17,000, I believe that's a good zone or a good price area to be buying in. So when BTC drops back down into the 15,000, 12,000, I believe that's a good time to start dollar cost averaging and just making it maybe a weekly, bi-weekly, or monthly thing where you allocate a certain amount of money to going into the cryptocurrency market. And I say that because Bitcoin is a representation of pretty much the whole cryptocurrency market or the health of the cryptocurrency market. And so once it gets down there, I definitely think that's a good time to start buying. But as of right now, I think we have some ways to go down still. We're doing a little pause here, right now. But I see it going down. And that's from an investor's perspective. If you're trying to trade cryptocurrency, which I don't recommend, same rules still apply as far as the strategy. Where it's currently at now is consolidating. And so because it's created a consolidating type of range, the next buy is pretty much use basic support and resistance. We didn't stay below we didn't stay below price here. So we had a strong bounce. Then we bounced again. And just like the video I put up earlier, the next area you should be expecting a bounce is in the same area. Because it's created this consolidation range, the next bounce is more than likely going to happen around 19,000, in between 19,000 and probably 18,000. All right, so we can just highlight this as the buy area. In between 18,000 and 19,000, I believe is the next buy area for Bitcoin. And we're currently selling from sell area. So that's my take on cryptocurrency, though. Not much going on. It's pretty much falling as the dollar is rising. And let's go ahead and look at gold next. All right. I see gold is starting to. I'm sorry, I'm like, hold on. Okay, here we go. Gold is not starting to reject. All right, so gold is currently back in the consolidation zone and is heading towards the bottom of the consolidation zone. So the next bounce, again, just like we were looking at with the previous pair with Bitcoin, because it's back in the consolidation range. What does the price tend to do when we come back into consolidation ranges? Consolidates. All right, so we're falling from the top of the consolidation here, and we're headed to the bottom of the consolidation here. And so that's where I would expect the next bounce. And from the momentum, because remember, this is gold versus the United States dollar. And even though gold is a safe haven, all right, the value of gold itself may be going up. Investors may be investing into gold as a safe haven, but this isn't gold itself. What you're trading is the price of gold against the United States dollar. And I think that's very important to be aware of as you're trading gold. If you're going to trade gold against the United States dollar, you have to take the United States dollar into consideration. You could be thinking because it's a safe haven that it's supposed to be going up right now, but it's paired against the dollar. And the dollar is very strong right now. And because it's stronger than gold, then this is the reason why gold is going down. But because gold is a safe haven and there is cash flow going into the value of gold, is going to create like consolidation within bearish institutional order flow. And so that's what we're seeing right now. We're coming back down into a consolidation range as the price or the value of the dollar goes up. And with the dollar being a safe haven, gold being a safe haven, we're looking at consolidation type conditions for gold. So I'm expecting gold to come down to the bottom and find support here and bounce. And so because I'm expecting that, I want to be looking for sales on the lower time frame. I want to be looking for sales. Of course, first sell zone that I see is obvious. Pretty sure you see it too, Dame, would be right here, right? So within consolidation, within higher time frame consolidation, I believe it's okay to take a sell, especially because we're coming from the top of the consolidation and the momentum is bearish. Second sell zone would be where this red line is at. All right, so I believe this is going to be a sensitive area. Why a sensitive area? Because it's a previous low, previous major low. This low was broken here. And when the low was broken, it was done with a lot of momentum, which created imbalance. And that low happens to be at the 50% of the imbalance. And so that's confirmation. See, looking at this on the 4 hour, we did what's called a liquidity sweep or seek and destroy candle. All right, so I wouldn't be doing any trading within this range right here. Anytime I see doji candles like this or seek and destroys, I wouldn't be doing any trading until we broke below this low here, where it's red. I just highlighted it red. If it breaks below here, I will start looking for sales. But if it doesn't, I'm not looking for any sales in between this range. I'm waiting for gold to come back up into this sell area and sell off. The reason why I would sell if it broke below this low, if you wondering, Dame, is because if we follow the institutional footprint, of course, again, let's highlight this area right here. Let's highlight this candle. What's significant about this candle is the fact that it ran up and it took out highs before it ran down and took out the lows, right? So this is significant. This could be a footprint for the continuation down, or where we are right now, where price is at right now in the direction that is headed. This is the last area of movement. So we have our highs, and then we have this candle that ran up and then went down. And so if we break below this low here, I'm expecting it to go down further, with this being the origin of the move down. All right, so that's what I have for gold. First sale level in between the price level of 1760 and let's say 1770. So a range of 100 pips. Second sale zone would be at the last major low, 50% of the imbalance, which is at 1785. All right, let me make sure I'm not missing anything. Gold. And the last one we have is GJ. Right on time. It's 11:49. Got a little bit of time left. Let's go ahead and mark up GJ. That's one of my bench pairs. Yep. Okay, so I always get asked to mark up GJ, so I still have some previous zones. Currently, so just like I do with the United States dollar, I don't trade the Japan yen versus the pound versus the Japan yen. But if I did, I have to be looking at the JXY. All right. Anybody who trades anything going against the Japan yen, just like anybody who trades anything going against the dollar, right? These are major currencies. JXY is a major currency. DXY, or the dollar, is a major currency. So we want to look at what's going on with the JXY or the Japan yen. And from what I could see from the little bit of bits and pieces of information, it's extremely bearish. Extremely bearish right now, with no signs of turning around. And so if the pound is the first pair in GBP JPY, if JXY is headed down and is very weak, then I should be expecting strength in the pound. And so let's go back and look at GBP JPY, and we should be looking for buying opportunities. All right. So looking at where price is currently at, I have a mitigation zone marked up here. Anytime you see purple, that's mitigation zones where a buy zone either failed and has become a sell zone, or a sell zone has failed and became a buy zone. Where price is currently coming from, we're looking at this on the daily. We're coming from that mitigation zone, and we're starting to drop back down into it. Within that mitigation zone, we have a buy zone right here. All right, and this is on the daily. All right, so we have a daily buy zone here that GJ could be headed back down into. Just within a mitigation zone. We have support, or we have technical support from looking at the Japan yen that we should be looking for buys. Let's drop down to the 4 hour. All right. Pretty much looks the same. Wouldn't be looking for sales, but if I was, my next sell zone, if it came back up to it, would be here. If I wanted to take a chance on the sell and counter trend trade, but I'm waiting on the buy. All right, let's drop down to the 1 hour. Same thing. I don't even have to move. I don't even have to really change my my buy zone. I mean, I could get more precise and target a specific candle, but this is pretty much the buy zone here for GJ. I'm not looking for any sales. I'm looking for buys on GJ. And so once GJ reaches this area, this is the area that I will buy from. Stop loss being below the last low. So let me move this red line down here. This would be the stop loss. So this would definitely be a swing trade because that's about 180 pips. But we're talking about a bullish market. Okay, so with this being a bullish market, we're looking at this high to be targeted, this high to be targeted. And if we're swing trading, then we're looking at on that first high, about 230 pips. On the second high, about 300 pips. And if you really see structure actually continuing up, right, and creating a higher high on the higher time frames, we're talking about even to the last high, talking about almost 600 pips, if you want to hold that for a swing or a position. As far as short term, what's going on now? Market structure is too wacky on the lower time frame to determine if it's selling or buying. All right, it looks real consolidating. We've actually created a lower high, a lower low, and then we've created a high, a lower or a higher low, a higher high that didn't clear this high. And so this is consolidation right now within the zone. So from a short-term point of view, buying short-term, right, from the 15-minute, from the hour, those 30, 40 pip trades, it's looking inconclusive right now. The only clean thing I see is a position trade because that position trade gives me room for error because I have a larger stop loss with larger targets. With the smaller stop losses, smaller targets, with this structure, this market structure, I don't see anything clean. I don't. I see possible sales, right? We're within a range. So I see a sale here. I see a possible buy down here. But yeah, I see a range. So as far as GJ, I don't see anything on the lower time frames. But from the higher time frame point of view, definitely bullish on it. And that's where I would buy from. That's where my stop loss would be. Right, let me see. Let me check the comments. Got you. Oh, no problem, Dame. No problem, Arthur. So it is 11:56. We have come to the end of Markup Mondays. I hope everybody got value from this call. I hope everyone has a profitable trading week. As always, use proper risk management, control your emotions, and trust your analysis. Trust your analysis. Don't be greedy, and go for your goals. If you don't have any goals, definitely need to set some goals for the week. You got to have some type of target. You got to have some type of limit. You got to have some type of cutoff, right, of when you stop trading, whether it's if you lose too much or if you win too much. You got to have some type of target to shut yourself off, because if you winning, you'll end up giving all your money back. If you you trade too much, and if you're losing, you can end up blowing an account trying to get back what you lost when you actually need to just sit down, reset, and wait for next week, wait for market structure to form, more clear things to appear, and for yourself to, reset and adjust emotionally. So again, I hope everybody has a profitable trading week. I hope everybody enjoyed this call. And I will see everybody in the chats on the charts. And for everybody just tuning in to Markup Mondays, I will see you all next Monday for Markup Mondays. All right, y'all. Peace. Have a good one.